Hi, everyone. Welcome. Welcome. I don't know where you're joining us from. If you are on the West Coast like me, I think my video just froze. I hope you can hear me. There you go. If you're on the West Coast like me, welcome and good morning. If you're somewhere else in the world, thanks for staying up late with us or having lunch with us. This is a very, very special AMA. We're joined by an absolute rock star and superstar, not just in the world of venture capital, but the world of inventing, something we do not do enough or talk enough in the world of Silicon Valley, although you might think in a place that's all about technology that we should, and we do. This is Pablos Holman, and he is going to be our guest for the next hour. This is an AMA, so I will ask Pablos some questions, but we also want him to be able to answer your questions. So put them in the Q&A, and we will get to as many of them as possible. I seem to be having a few internet challenges this morning, so I apologize if I'm in and out. Hopefully you can at least hear my voice, and we will keep this going and we will get through the next hour together. Pablos, you are an absolute rock star, as testament that you were on the great Tim Ferriss podcast. I think you were the next to last guest. And I was listening to it yesterday with my partner in the car, and Tim was talking about meeting you at I think it was an O'Reilly conference where you did a hacking trick that scared the shit out of him. And hilariously, that was an O'Reilly conference my partner was at, where he also met Tim
Oh,
at that conference. He was like,
oh,
I was there, I saw that same trick.
oh,
So
wow.
a small web 2.0 world we were all in.
Yeah.
Um, so I want you to tell people a little bit about what scared even Tim Ferriss, but also, I want to talk a little bit about your background, because even in a world of unconventional people, you are an unconventional person. You grew up in Alaska. You had one of the earliest computers in Alaska, and you had these two disruptive, nerdy things that people thought would not amount to anything: a skateboard and a computer. Tell
Mhm.
us how those two things got you where you are today.
Well, thanks. The computer was this kind of bottomless pit of intrigue. And since I didn't have anyone to teach me about computers, that hadn't been done anywhere yet. Nobody had seen a computer where I was from. And so most people in my town, the first computer they ever saw was mine. And so it was a really strange dynamic compared to what other people have experienced, because I just got this sort of early start and I had to learn it all the hard way. And that paid off for me because, partly I got to computers early and they turned out to be useful and go a lot of places. Um, but also I think a big part of it was that learning by reverse engineering, learning to figure it out the hard way by taking the thing apart and, rebooting it and crashing it over and over again. That was kind of my learning style. And I think that paid off for me because when you're trying to do new things, you can't do it by reading the directions. You have to you have to figure things out from the ground up. And so that was just so normal to me that I think it made it very natural, or at least I don't know, I end up being a pretty good fit for working on new technologies.
And, I should say we're obviously doing this program as part of Dessel Group, which runs VC Lab. You are also an alum of VC Lab. And so we're going to
Yeah.
get to a little bit how that hacker ethos is playing into how you're investing in companies, because part of what we're trying to do as VC Lab is break venture capital ourselves, and rebuild it, which I think is one reason we're big fans of yours here. And I should say to everyone watching, we are starting our latest cohort 19, this week. You can still apply, and Pablos is actually going to be one of the mentors who's going to be doing a special session with everyone in this cohort. So as you're watching
Cool.
this, if you're thinking, oh my God, I want more of this advice, you can still apply. Okay, let's get back to your story. So how did you then get from being in Alaska, being this hacker, into, hey, this could be a job. This could be something I do for a living.
Yeah, well, in retrospect, I can make it look like I had a plan, but I really didn't. My
It
plan was
always
to
looks
just,
that way in reverse,
yeah,
doesn't it?
yeah, I can totally make it sound like I planned it. But what I was doing was trying to, I was excited about computers. I was excited about doing new things with them. I was excited about making them useful to people. And so I was always looking for whatever opportunity I could find to do that. And, in the 80s, computers hadn't yet gone into every business. And so I could bring the first one. And that was really fun for me to bring the first computer into different industries. And, you know, I was a, I don't know, 19 or 20-year-old punk kid, but I would try to, sit down people who had had a career for decades and was an expert in their field and tell them they could either, learn to use this computer to do their job or, we'll just replace them. And so, I've been doing that for a long time, and I love it when you can show people how a new technology can make their life better, their business better, whatever they're trying to do. Give them that superpower. And so I did that for a long time in the up through the 90s, was building computers, and then I got interested in figuring out how could we take what we learned from bringing computers into the world and use that to bring other kinds of technologies into the world. And so for, about 25 years now, I've been working not on computers as much, but on using them to advance other kinds of technology. And now we call that deep tech.
Awesome. Okay, and so before we get into all of your work with deep tech, tell us what it was that you did that terrified Tim Ferriss at the
Oh,
conference.
so yeah, so back in the 90s, we started putting muggles on the internet, and it seemed like a really terrifying proposition because we knew everything was insecure and there were going to be sitting ducks. And so we were working on trying to both craft secure protocols and figure out how we could make, more secure services on the internet. But my way of doing that was to just terrify people by stealing their passwords and credit card numbers and stuff live on stage. And so I was kind of the first hacker to sort of show up publicly and say I'm a hacker, at a time when it was synonymous with criminal. And so that ended up being very interesting to people because, I was doing it largely for my own entertainment value, but scaring the shit out of people by stealing their passwords was a good way to make friends. And I made some friends that way, and other people like Tim, I managed to scare off completely. So now that was in a different era. I was friends with a lot of the tech founders, and so I could sort of get away with stuff that these days would be unthinkable to do in public. So
And, I want to talk about that for just a minute because, I've been around Silicon Valley since the late 90s, and it is interesting how much this place has changed. We've
yeah,
just gone through so many different eras. And even then, in the late 90s, it was really like very Harvard Business School, very big money, like platters of sushi being passed around. And then it was like desolation and wasteland. And then it was
yeah,
like then it was a little bit of like the era you're talking about. And you could kind of put everyone working on internet companies in one ballroom. And,
yeah.
it's just got, I mean, like when you look back and think about all those eras of, investing in the tech world, I guess what are some of your takeaways? Do you have sort of, I guess, lessons from it, things that you've taken from those eras you try to hang on to, things you're nostalgic about, things you would like to
Yeah, I
bring
mean,
back?
I certainly romanticized the Silicon Valley of the 80s and 90s, and there were a lot of things that sucked about it, but the part that matters the most, or one of the parts that matters the most to me, is that in those days, the the whole machinery of startups and venture capital in technology was aimed at bringing new technologies to life. And so, uh, to me, that's what this is all about. That's what I'm still trying to do. That is not what Silicon Valley became. We systematized software companies. So really, for the last couple decades, the predominant thing going on in Silicon Valley has been to use software to reinvent some business process somewhere. That's what SaaS holes are doing is going and finding some business in insurance or healthcare or payments or whatever, and then just throwing software at it to try and um, make it more efficient, enough with enough of an efficiency improvement that they can, parasitically suck some cash out of it, and that's the game. So look, that needs to get done, but we have this kind of, semantic limitation here, which is, that is not the same thing as trying to bring a new technology to life and bring a new technology to the world. In the 80s, a Silicon Valley startup had to show that they were creating a new market. We in this is a sort of objective that is completely lost on modern startups. They have MVP and they have product market fit and these things, but they don't have create a market. What did Apple do starting in the mid 70s? They created a market for something people didn't know they wanted, right? Um, that's what cell phones were. They created a market. People didn't even know they wanted a phone in their car or you know, their uh, workout program, whatever. So
You can't say
there's like,
pocket because they were this big.
yeah, I can't say bucket. But so that's create a new market. And so that's what the tech industry did was, people didn't know they wanted a modem or a website or any of those things. That's creating a new market. And I think that that's not the only thing to do, but by definition, those things were aligned. You may have a new technology, a new market. You have to convince people this is useful. It's going to make their life better and all that kind of thing. And um, so I sort of miss how the majority of people were aligned around that. And now it feels like, all we're doing is, you know, reinvent payments for the web, then reinvent it for mobile. Now we got to reinvent it for AI. It's kind of just taking an existing market and trying to swap out the thing that is under it. And that's, look, again, needs to get done, but I'm not very excited about those things. And I think that it has drawn too much of our capital, our careers, our attention away from the much bigger opportunities.
Or finding another way to get people to click on ads. I mean, there's that famous like quote from one of the
Yeah.
early
Yeah.
Facebook guys of like the greatest minds of our generation are being used getting people to click on ads.
Yeah, that's exactly what's going on. And look, we need that to some extent, but I think it should not be the majority. And it feels like for a long time it has been. So we need to find other business models. So I've been trying to show people how deep tech solves all that. Deep tech
Mhm.
goes into all the industries that Silicon Valley can't touch. And that's where the biggest opportunities in the world are. And it might not be creating new markets like I just described, but it is about bringing new technologies that could underpin the biggest markets in the world, and that the ones that couldn't be overhauled by software alone. That's going to be food. You can't. I was joking that the software is we eating the world, but the world can't eat software, right? So food is an example. Silicon Valley doesn't touch it. Mining, clean water, construction, manufacturing. These are all in even apparel. These are industries that every human on earth relies on.
Well, and
Energy is
I
the
know energy
biggest.
is one you're really
Yeah.
passionate about.
Yeah. Energy is the biggest market in the world. Silicon Valley basically doesn't touch it. We brought solar panels into the world and scaled that up in the last 20 years. And so that's kind of uh, a technology advancement that has helped out a bunch. But by and large, if you show up on Sand Hill Road with something that is not exclusively software, for decades they've been unwilling to entertain your story. And that is we're at a turning point now where that is starting to change in a big way.
You do think it's starting to change in a big way? And what's driving
Yeah.
that change other than people like you?
I think it's not me that's driving the change. I'm trying to co-opt the machinery of venture capital and sort of steer it, name it back at important new technologies. But what was driving the change is that the opportunities don't exist for venture capital the way that they did. All these SaaS deals are incredibly saturated. There, there's too many of them. There's too many investors that want to do it. There's too many investors with money that don't want to do much work. The opportunities aren't very big. And yeah, occasionally you get a big hit, a Zoom or a Slack or a Stripe or something. And so that's the game they're playing. But there aren't enough of those to justify the scale of venture investment. And so the reason for that is that the software market is actually not that big. That's what I've been saying
particularly
lately.
given how big the funds have gotten.
Yeah, if you add up all the software in the world, you're looking at a market that's a little over $2 trillion a year. And if you add up everything else in the tech industry, all the hardware, all the, sort of support services and stuff, you get to maybe 5 trillion. But global GDP is in excess of $100 trillion a year. So what's happening with that other 95%? Well, it's not software. So if venture wants to make big returns, they're going to have to go find other industries. We have companies in uh, shipping. That's a $2 trillion industry. Shipping alone is as big as software. No one ever thinks about it. There's no tech in shipping at all. Durable goods is like, all of your furniture and sinks and light fixtures. That is a $4 trillion industry, twice the size of software. No Silicon Valley company working on manufacturing durable goods. No, apparel is a $2 trillion industry. Um, Energy is a $15 trillion industry. So if you want big opportunities, how about, well, measuring your TAM? you know, every startup has to show up with a slide that shows TAM, and it might show tens of billions of dollars or hundreds of billions if things are insane. The TAM of our fund is like the GDP of planet Earth. So I think that, just recalibrating on how you think about these things can be really helpful in venture because the machinery of venture has been very powerful, very successful, very important. We've highly developed it and tuned it over decades now. Same for startups. That's winning. Those are the things Silicon Valley created that matter. So let's aim them at bigger problems, bigger industries, and bigger opportunities.
So you've worked on everything from laser mosquito zappers to hurricane suppressors, and you just described a massive TAM that's
Yeah.
more than 90% of GDP. How do you decide as a VC what you're going to focus on, what is solvable, what is within your time frame?
Well, I got to work on a lot of different technologies, and that really helped for what we do. What we do is very unusual. We are investing in technology, and everybody else says they do that, but what they're really doing is investing in spreadsheets. They're waiting to see some hockey stick growth curve tied to something. Could be users, could be whatever. And that's okay. We need those investors, for everything. You need very circumspect, finance-oriented investors who are going to look at spreadsheets. When I invest, we got, the team's not complete, a half-written patent, wires sticking out of metal. There's not, there's no spreadsheet yet, there's no deck. So we take on understanding the technologies, trying to figure out if they could be brought to life on a venture time scale. Can we commercialize fast enough? Could it be done? Could it be manufacturable? Those kinds of things. We're trying to figure out those things early on. That's very unusual. But if we can get these things out of a lab and into a startup and sort of shape them up to be venture compatible, then the spreadsheet investors could get excited about them. Oh, they can see some customers, they can see some contracts, they can see, unit economics, those kinds of things get worked out. Then it starts to get really attractive. And one of the amazing things that people miss is there's a huge difference between investing in deep tech and investing in software, which is that take on you take on technical risk early on, but I almost never take any real market risk. We have a company that has figured out how to recycle the gold out of electronics waste. So every year, $20 billion worth of gold goes into electronics and then just ends up in a gold mine we call a landfill. Well, we can separate those metals, recycle them. They're infinitely recyclable. And there's no product market fit problem for gold. It literally defines liquidity. So, well, if we can get it, and so the day, there's technical risk right up until we show it works and we get the first deployment and we get first customers and stuff. But after that, we just have this vast industrial market. And so the technical risk goes to zero and the market risk was never there in the first place. If you compare that to a software startup, they're not taking any technical risk. I mean, any iPhone app, you can draw on a napkin, you could vibe code this weekend.
Yeah, especially now.
Especially now. So they're taking no technical risk because that scares them. It's hard to measure, but they're taking infinite market risk. You don't know when somebody's going to make a Zoom killer, a Slack killer, a Snapchat killer. So you're constantly dealing with this perpetual market risk. And so I think these dynamics need to be understood by investors if they want to, sort of branch out beyond what they've been doing and see the opportunities in deep tech.
So this is fascinating. You're kind of this bridge between these amazing technologies and opportunities and traditional VCs who are not quite able to stomach what you're doing. Like you're kind of getting these things ready so that other
Yeah.
people can get excited about them. When you say we want to try to take these things and get them into a venture time scale, is your definition of a venture time scale different than a typical VC? Do you see a little bit more latitude? How do you define that?
Well, the venture time horizon historically is, rule of thumb is that we all have 10-year funds. And in the SaaS era, that kind of got compressed down, and you saw a lot of these 5, 6, 7 year funds. Um, but they're lying. The truth is, for the last decade, we've been in an era where there's hardly any liquidity anyway. So these 5-year funds are raising CDE rounds, not only 10, but 11, 12, 13 years in, and they're not returning capital because they can't,
Yeah.
there's no M&A.
There's
So,
whole university endowments that have like 30% of their
yeah.
alternative investments just in Stripe.
Yeah.
Seriously.
Right. So the point being, um, I think people are being disingenuous about the venture time horizon. So deep tech, you could say, okay, these things take longer. I think that's a fair assumption. So we're a 10-year fund with 5 1-year extensions, so maybe 15 at the most. But I don't invest in things unless I think they can be commercialized and return in that window of 10 years or less, right? So I don't think I'm actually longer necessarily than other venture firms. So we have to prove that out. But so far it's going really well. We're 3 years in and we have one company that went public already on a deep tech fund. So, and I think the other thing to understand here is that when I'm investing, yeah, it looks like Pablos is doing crazy shit in the garage, but late stage deep tech, you know what that's called? That's called industrials. And so our companies tend to graduate from venture kind of early. Once a deep tech company is gets that first customer and gets paid and commercializes, the technical risk is gone. Now it's just scaling. And what are we doing? We're not selling equity for that. We're accessing project financing and debt and capital that no SaaS company is ever going to access. We're accessing insane amounts of capital for scaling these companies because there's money there to build power plants. There's money there for, uh, for manufacturing and construction of these kinds of things. So that's capital that that's just unfathomable to a typical founder because they're looking at selling equity all the way along. And we don't see having to do that for a lot of the kinds of things that we do.
What percentage of the things that you're looking at have regulatory risk, and how do you think about that?
Ugh, that's a tough one. So it certainly varies by market. We invest all over the map. So we have, in some sense, every kind of regulatory risk. And then we have also offset that by uh, not being stuck in one vertical. I'll give you the best example. So when I was at the Intellectual Ventures Lab, this is in like 2007 or 8, we invented the most advanced nuclear reactor. It's called TerraPower. And this is if anybody's ever seen me on YouTube, I'm probably talking about the TerraPower reactor, which is a nuclear reactor powered by nuclear waste. And it is advanced reactor tech. It's amazing. It's super safe. It's super cheap, super scalable, everything you could want. And we took it to the NRC, which regulates nuclear in the US, and tried to get approved to build a test core. And they told us, oh, we don't have any way of approving any new reactor technology. So you should take it to Russia or China and see if they'll let you do it. And we did. This is like a little over a decade ago now. We got a deal with Xi Jinping. He loved it. Started working on a nuclear reactor in China for 3 years, and then Trump one's trade war killed it. So I was on stage for 17 years telling people nuclear reactors are coming, and I was wrong every year because of this extreme regulatory nightmare where we just conflated nuclear reactors with nuclear bombs. We outlawed the wrong one. And if we had done it the other way around, you never would have heard of global warming. That's what's possible, but we're living on the wrong fork in history here. And so then exclusively because of the regulatory regime being, way too overbearing. The cool thing is that has all changed in the last year. So we now have a world where the most bipartisan bill I've ever heard of, called Advance, was passed last year to push building nuclear reactors in the U.S. I think Trump has signed at least 4 executive orders now to push building nuclear reactors. We have a company, a different one than what I described, building a nuclear reactor that was on a fast track to get it approved in 2 years, build it at a national lab, and then deploy the first commercial reactor in 2029, which would be amazing. The Department of Energy is pushing them to do all of that by July. So they'll have the first nuclear reactors in the ground live in July. So this is extreme tailwinds from the federal government is helping a lot. So these things can change. It's not my department to sort of, try to make those kinds of changes in the world, but I hope other people can see that this is what's possible. And in a time when people are pissed off about everything in the world, it's one of the most exciting things happening is we can finally, build these things. They will be totally safe. They'll be totally cheap. We can build them in a factory and send them everywhere in the world. And so that's the kind of thing that's very exciting to me. And, if you could bring that to life, like name one software product you would rather bring to the world than clean, cheap energy that can go everywhere.
Seriously. All right. Before we go to the questions that are piling up in the Q&A, I want to ask a little bit about your experience becoming a VC and why
Yeah.
you decided to become a VC, but also, how you think about for doing something this big, fund size, modeling a fund, what that looks like.
Yeah. So at my lab before, it was basically a big invention lab. We got to work on inventing new technologies and kind of free of the constraints of having to worry about commercializing them and things. And that was kind of like a venture fund, but instead of investing in startups, we invested in inventions. And we got 6,000 patents on our own inventions at that lab. Um, we sold some, we licensed some, we made a few startups, but we weren't really set up well to do that. And I believe that the startup is the machinery that the world has created for doing new things and bringing them into the market. And it's the best machinery we have for that. And so I wanted to make a lot of startups, and we just unfortunately weren't set up to do that. And the ones we did are doing really well, and we made maybe 20, could have made hundreds. And so what I saw is that the world didn't understand the API of patent or invention disembodied from a startup or a founder. The world does understand the API of startup. Everybody knows how to buy and sell and trade and work for and invest in startups. So I wanted to embody these inventions in startups. And with the venture firm, that's what we get to do. Every invention, we back inventions. Every invention we back is in a startup. And so we can attract the resources and things to that structure. And so we started Deep Future Fund in 2022. If I hadn't used VC Lab, I probably still wouldn't have it off the ground. It was so helpful having VC Lab because you can tell by now I'm the kind of guy who wants to try new things. So I'm like, oh, we'll do this evergreen rolling fund and we'll structure it this way and we'll do a totally new thing and add cryptocurrency and whatever. Um, Fortunately, Adeo and Mike talked me out of almost everything I wanted to do. And now I just have a plain vanilla venture fund with the Cornerstone LPA. Everything about Deep Future is exactly like all of your funds. And so that was very helpful to me. They really provided the structure and helped systematize things and helped me. I think it would have taken 3 times as long to start the fund if I hadn't had their help. And so we got the fund going in 2022. I did a few things. There were a few things that I did that were different than what they recommended. So we have I think it was the first fund is $18 million fund, which is for what we're doing about as big a fund as I can run because we'll do about 60 pre-seed deals with that. We only do pre-seed deals. So I can put a couple $100,000 into these companies. Any more than that would be probably at least irresponsible. And so we do a lot of pre-seed deals. That's what we do. And we don't have reserve capital. So that worked out pretty well for us. It's a bigger fund than VC Lab recommended. It probably took us a little bit longer than other folks to build it. Maybe we kept it open for maybe a little longer than normal. I don't know, actually. But that that has worked out quite well. I think you could start with a smaller fund that you could build and close faster and deploy faster. For what most people are doing, they don't need to do 60 deals like us. We're doing a lot of crazy stuff, or at least crazy sounding stuff. So we have to distribute our risk a little more because we invest so early. We have to do more deals to offset that risk. But that's all worked out really well for us. We'll raise a second fund pretty soon that will have reserve capital to double down on our winners because the failure,
That's
the
what I was
biggest,
going to ask about.
yeah, yeah, the thing I think the biggest learning for us to date is we thought we could go do follow-on rounds with SPVs. That has been more trouble than it's worth. It's as much work to raise an SPV as the fund. And the truth is all those LPs are counting on us to tell them about the deal and whether it's good, know the whole thing anyway. So reserve capital will be a better structure for what we do, since we have to essentially make those decisions anyway. So we're raising a bigger fund that'll double down on our portfolio and continue the exact same strategy and thesis. We'll continue to just do pre-seed deals for deep tech breakthroughs. And so for us, that we're very focused. We're actually very clear on what we do. I say no to things every day that we don't do. People are constantly asking me if I can get them secondaries in SpaceX and shit, and I probably could do that. I'm not doing any of that. I only do the thing that I'm uniquely good for. So we're highly differentiated. There's probably no fund really like us, even if they're a deep tech fund. If you look, we have certainly the most wild portfolio in the world. um, and and it's performing well as well. We already have line of sight on being kind of a top decile fund. So we'll probably by next year sometime. So that's all worked really well, and I think that's what a lot of people fail to do. They're not focused enough. They don't have what you would call uh, founder market alignment. We sometimes say with startups, you want that in a venture fund. You know, if you're a GP, do something that you're uniquely good for. That's what the world needs from all of us. We don't, if somebody can do it better than you, get them to do it. Do the thing you can do. So that's our fund is sort of a very good example of that because my partner Michael Reed is a neuroscientist. I'm obviously a weird computer hacker, but collectively, like we're very aligned as GPs with our thesis and what we're doing. There's no difference between the thesis of the fund and the thesis of my podcast or the book or any of this stuff. I'm like, it's all one thing, and that is a very helpful and powerful thing to do.
I love that. And I mean, it is so key to what VC Lab is all about. It's like
Yeah,
the whole point is there are tens of thousands of people in the world who would be amazing VCs, but they don't fit the paper doll cutout of what a VC is supposed to be. And the whole
yeah,
point of the program is like, what is your special sauce? And it's like you are one of the most extreme examples of someone who
yeah,
is so attuned to their special sauce. It's
yeah.
like, this is what it is. This is what I'm doing. I mean, I would imagine it's like it was super easy for you to raise a fund because it's so differentiated. Was it hard for you to raise?
Look, I think for everybody, raising a fund is hard. Um, it is also hard for us. We do a lot. Um, I don't know how anybody else does it because we have a lot going for us. Michael and I are both extremely networked in different ways. Um, there's hardly anybody on the planet we can't, get introduced to this afternoon if we need it. We're very good at that, but um, I think our fund we we were able to raise it really, we have great LPs, didn't need a lot of them. We have like maybe 20 LPs in this fund. Um, what I think about it now, there was one thing I was trying to do when we raised this fund is I wanted LPs from all over the world because there's no geographic center of gravity to what we do. We're not in the Bay Area. We have a few deals there. We have them in, I'm in New York. We got a couple here. We got them in, 3 or 4 or 5 countries in Europe. We've got them and I went to Indiana and got 3 startups there we've invested in. I'm probably the only VC who ever went there. So that to us, that there's no geographic center of gravity. And we know that our companies are in industries that sometimes we can build faster in other regions. That might be a regulatory uh, you know, hack where we just build in some country that doesn't have this industry yet. You look in the Middle East, there's a lot of industries they don't even have yet. There's no regulatory capture there. Why would we stay here and fight the century-old incumbents? So anyway, the thing about it is we wanted LPs from different industries and different regions that could help us out, and we spent a lot of time on that. Um, I'm not sure it was worth it because uh, I think the lesson was that we were trying to get people into venture who didn't normally do venture, and they might be worth billions of dollars, and they are the ones who own some industry in some part of the world, but they don't normally do venture, and getting them into venture would have been a bit of a hurdle. Getting them into, our sort of extreme sports version of venture was a lot. And so I think we were barking up the wrong tree to some extent, and I'm not sure that it was worth it. So I'm expecting Fund Two. I'll go to some of the folks who we skipped in the first fund. We didn't raise this fund in Silicon Valley. We have a few people, founders that we love, people who are friends that invested this fund, who are tech founders or maybe traditional tech founders. Um, but I think in the second fund we'll actually try to get more of them because they like venture. and they know they like technology, even if they don't, even if they built their career in software. And I know I'm throwing a lot of shade on software, but nobody loves software more than me. Hopefully, you realize by now, like my best friend from childhood is an Apple II. So there's so those folks I think are a better match for venture, at least, and for technology than the than going around the world. So that might be useful for somebody, hopefully.
All right, great. So we're going to get to questions. We have about 14 questions and a little over 15 minutes. We'll see if we can do a minute a
Okay.
question. Before we get to that, just two quick things. First of all, we've got to shout out your book. I own a bookstore and I'm an author and I've not
Oh,
mentioned your book and I feel like a asshole right now. So can you please hold
no,
up
no.
your book? It is a bestseller. It's incredible. And for people who have loved this conversation, please go get this book. It is
Thank you.
absolutely amazing. And at some point, I would love to actually just talk to you more about your book
I
because I
wrote the
love
book.
books.
It's not AI.
Thank God.
It is the number one bestseller in venture capital. So I think you guys are sort of obligated to read. This book is meant to be uh, fun. It's about why it's important. The book is called Deep Future, but it's about creating technologies that matter. That's what I'm obviously very excited about. I'm trying to show how we do that, and all the things I'm talking about here, those lessons I tried to put in the book to help people see how we can invest in these things.
Amazing. And then I also just want to say all the things that Pablos was just talking about and the learnings, even someone who is this freaking smart and the things that he's learned from fund one to fund two, those are the kind of insights that he's going to get mentoring folks. So if you're interested at all, have not applied, have been thinking about applying, you're going to want to be in the upcoming cohort. Domenico will put stuff in the chat. Come apply. Third thing, I see everyone commenting on my crazy orange cat in the chat. Thank you for indulging him. He's such a showboat and he is very happy to be getting the attention. Okay, let's go to questions from the chat. I'm going to go to the oldest first. So the people who ask the question the first get the most attention. Okay, Mario, what are your views regarding quantum computing and the absolute revolution it will mean when it meets AI beyond R&D and scientific development?
Oh man. Look, quantum computers are going to be amazing if we could ever make them work. Um, I would not hold your breath. I think this is a very overhyped area that is not venture compatible. There are real breakthroughs that need to happen. Those breakthroughs do not happen on a schedule, no matter how bad you want them. I think the people working on quantum computers need a lot of money to do their experiments. This is a research area. They figured out they could trick some venture capitalists into giving them money to do their research projects. So good luck. I find some folks ranging between disingenuous and fraudulent in the quantum computing space as it relates to venture capital. So, as a scientific research area, amazing, but in venture, I think it's very unlikely to yield commercial results on a venture time horizon. And the reason I'm pissed off about it is I think it poisons the well for other technologies that could have made more progress. We have all kinds of classical computing advancements that are real right now, and they're proving themselves over and over, and they're still not getting the funding that quantum computers are. So that's my view. I know it's heretical. We can wrestle about it offline sometime if you want.
Right. All right. From Natasha, if one is building for a problem of tomorrow that doesn't exist right now, how do you foresee compliance regulations? We talked about this a little bit. Do you work with regulations in place today? I don't know if you have anything else to add other than what we talked about.
Okay, is this compliance regulations for startups or for venture funds? What are we
I
talking
would
about here?
imagine for startups, because she says
Yeah.
if one is building for a
Oh,
problem of tomorrow that doesn't exist right
yeah.
now.
Um, Look, there's a lot of problems in the world. A problem of tomorrow, another way of describing that might be a market that doesn't exist yet. And I think that's a very dangerous thing to take on, in spite of what I said before about creating a market. If you are in a position to create a market, be the first mover, own that market, I love it. you can see how that has happened in certain categories, right? Um, Apple is the smartphone market creator. Not to disparage other attempts to make smartphones that sucked before iPhones, but that's what happened. So if you can do that, there's a big payoff for you there. But solving a problem of tomorrow, I think, is a dangerous thing to take on if you're waiting on somebody else to make a market for you. If you can make the market, great. If you're waiting on a market to be made for you, here's examples. I helped start Blue Origin 25 years ago. So that's a spaceship company. Every space founder comes to me um, because they think I'm going to love their thing. And I don't invest in any space stuff. So far, we've done one thing. Um, the reason is most of them have no market. They want to go do refueling in space. They want to do deorbiting or reorbiting. They want to do mining. They want to do things for which their customer doesn't yet exist. They're expecting somebody else to show up in space and need to be refueled. Well, there's nobody out, there's no customers looking for that yet. And in a space company, you have technical risk by definition, but now you're taking on market risk as well. So I want to trade one for the other. So that's the framework I would use to think about that. Hopefully that's helpful.
I love that. Okay, Matthew asked two questions, and I'm going to ask what I think is his most interesting one. What keeps you up at night, both personally and professionally?
I sleep pretty well at night. Um,
Do you take Ambien?
I don't. Yeah, I don't take anything. People think I'm on everything. I'm on Red Bull and water. That's basically my diet. Cheeseburgers. I think we live in a world that wants to get wound up about a lot of problems. I would sort them into real problems versus imaginary problems. Um, the real problems are pretty clear. We're trying to all these things I'm talking about, making our old crummy industries better, solving things like infectious disease around the world, solving, energy. These are things that are pretty clear real world problems right now. There's a lot of imaginary problems. Is AI going to turn us all into paper clips? I don't think you need to waste any of your time on imaginary problems. People suck at proactively solving imaginary problems. They suck at calibrating them appropriately. What are the odds that we become paper clips? Well, you could make up a number and we probably won't even find out in your lifetime. So I think it's just a huge diversion. It's wasting a lot of attention and a lot of people's uh, productive capacity trying to speculate about problems that may or may not exist. So in my mind, a better thing to help you sleep at night would be to focus on real actual problems and try to help solve them. Then you'll
That
sleep like I do.
that is one of the best things I think people need to hear right now. I
Mm.
literally saw an article yesterday on Axios that was like, there are the three of the worst things that have ever happened to humanity happening right now, and why aren't we freaking out enough? And I was like, how that may or may not be true, but how is this article helping anyway? How is it helping that you just told us 30% of entry level jobs are gone? There's nothing any college grad can do about that other than what they're doing right now. Okay. Timothy, I have been in deep tech and hard tech with real solutions to global scale problems, but it's tough raising capital because VCs are fixed on next software. Any suggestions?
Yeah, so obviously we see this every day. A lot of what I do, literally the call right before this one is founders who have a technology I like. I would love to back them. They're not ready to raise money. And here's why. Um, you're competing, not just, if I have you know, if I have a better iPhone, I'm not going to go compete against iPhone. I'm competing with every other thing investors could be doing, right? So the noise floor is extreme. Everybody's seeing lots of deals. Lots of them are opportunistic bullshit, but they still raise the noise floor. And you have to rise above that. So you have to have not only a better technology, but you got to be able to pitch it in a way that is competitive. And you're mostly competing with people who have no technology but are really good at pitching. So I think it's important to be honest with yourself about, are you playing in the major leagues? Are you bringing a complete story? Are you showing all the puzzle pieces, where they're going to come from, how much they're going to cost, how big is that market? Is there a customer breathing down your neck to get it? You need to really put that package together. And that is something that the really good entrepreneurs are doing. And these are some of the entrepreneurs who I'm sort of throwing shade on because they're really good at selling. If you're a technical founder, a deep tech founder, go find a frat buddy or a cousin or somebody who can sell some shit, get them involved and appreciate them for their skill set. They're good at things you suck at. They're good at selling that story. We need to be selling better stories around these technologies. And so I think that's a big part of it. I do find that a lot of times I'm being the kind of VC dominatrix telling these founders to get their act together on those things. And this is shit you would learn in Y Combinator. I think, you know, I could say a lot of, disparaging things about Y Combinator, but they're really good at making sure you get a deck and you get a pitch together. So we probably need to learn something from it. You don't need to go to Y Combinator, go to YouTube and watch Y Combinator 3-minute pitches from their founders, because that's what you're up against. And there's a lot more that we could talk about, but I think that a lot of times that's the biggest failure mode I see. Venture wants to put money into things. They have a lot of money. They need to deploy that capital. They're looking for somewhere to put it. In order to get it, you just got to be competitive. You've got to show that you are the best possible thing for them to put the money into. I guess one other quick way of calibrating: when I invest in things, I'm looking for a 10x multiplier. If somebody shows up with something that's 10% better, even if it's $1 trillion market, yeah, 10% of $1 trillion sounds pretty good, but that's not enough margin for me to bring a new thing to life. If something's 2x better, that's not enough margin. I need 10x. We need a 10x improvement. And there's so many of those that I probably wouldn't waste much time on things that are not 10x. That could be 10x faster, cleaner, cheaper, more economical, more humane. I don't know. So find a multiplier, because we do 10x multipliers, sometimes 100 or 1000x multipliers. That depends on what you're going after, but that's what I'd be looking for. You need enough margin in there that you can attract the investment and say, look, whatever you think about what I'm doing, I'm 10 times more profitable than the state of the art guy. Surely that'll work. We have a company that I talk about all the time working on self-sailing cargo ships. So they don't need fuel. They're wind powered. The shipping industry burns half of its OpEx. you know, so I mean that sounds like I'm 2x better. I'm actually 100% better, or 100, like because of no fuel cost. So I'm not saving 10% on fuel. I'm saving 100% on fuel. That's about as good as it could get. So I think there's a kind of something to be looking for there to make sure that you are bringing something that's going to offer venture scale returns.
I love that. That was such tangible advice to a question that a lot of people would say, I don't know, people just don't want to fund science. You're going to be such a good mentor for cohort 19. Those folks are lucky. Okay, let's see if we can get one more. I love this one, particularly to this audience. How does a new VC fund get evaluated in the first few years? Especially because a lot of people who are going through VC lab are trying to do a small fund, deploy it, raise another fund. They're trying to go through this wash, repeat, rinse, repeat cycle. And especially deep tech companies, they may take a while to really see how
Yeah.
they're doing.
Yeah. So in a typical, say, VC lab fund, um, if you raise $5 million, you go do 5 deals at seed stage or something, and you're hoping that in a couple years, 2, 3 years, one of them is a big enough success that you can then pin fund two on that. You can say, look, I'm obviously a great VC. I'm successful. Here's my first, markup or two or three markups. And so that's the game I think most people are playing. It does seem to work for people. We don't exactly do that for a couple reasons. I find that, I'm in the business of talking about things that sound like total bullshit, but are actually true. So it's very important to me personally not to be disingenuous about things. And so if I'm hyping something, it's okay if it sounds crazy, but people need the more they dig, the more they need to find that it's actually real. If I'm hyping a markup, almost by definition, the more they dig, the less impressed they're going to be in any markup. And so I don't. So because we're a pre-seed fund, yeah, we get markups. We've done 34 deals in this fund. We have a bunch of markups. I barely keep track of them. All of my LPs are individuals who don't need me to do that, except for Decile, and they would like it if I did, because they're more of an institutional fund. And so I need to start doing that, but our portfolio is getting mature enough that I think I can start to show more rationally or substantiated markups. And that's not how I want people evaluating my fund. I want them to look at us as a first look deal. I want them to look at us as a source of, I'm the first investor who ever saw most of the companies in our portfolio. I want them to value us for that because that's something very unique that we're good for. Markups, certainly we want them and we expect them to get performant, but if I have an investor who is solely focused on financial metrics, I'm a pre-seed fund, I'm 3 years in. I don't know that I want to be selling that story. So that probably affects who would be a LP target for me. I'm not suggesting that you want to make a fund the way I do. That's just an example. That's how we do it. But if you were making a maybe more conventional fund, then I honestly think this is part of what steered VCs off track. They're trying to create these early markups. It's causing them to go do these secondaries and do these things where they get a quick return and show, I did it. And these are financial machinations. And certainly we need investors who do that, but I don't think it's really venture. So that's
Yeah,
more
they're
like
not
a trip.
supposed to be stock market investors.
Yeah,
They're supposed to be long
right.
term.
That's a trip to Pottery Barn. I'm trying some Shackleton shit here. So.
All right. We will unfortunately have to leave it there. I cannot imagine a better way to start my morning after a very late night flight. You're better than coffee. Thank you so much. And thank all of you for joining us. Clearly, Pablos is only one of the incredible mentors we're going to have. So clearly, cohort 19 is the one you want to jump into. It is starting this week. We have an incredible cohort. And I think cohort 17 like broke fundraising records.
Hmm.
So you want to get in on this. I think Q4 is teed up to be our biggest fundraising quarter that any of our funds have ever had. So it is the time to
Wow.
jump in. If you were thinking about it at all, jump on the train right now. It is starting. It is going to leave the station. And we will hopefully see you all on that train. Thank you so much, Pablos. You're such a
Oh,
rock
yeah.
star. We
Thanks,
appreciate
you
you doing
guys.
this. All right.
Yeah,
Bye,
good luck out there.
everyone.